Hi everyone, you're with Business Insider. This is Ramesh Iyer and we have a very special guest today. Ramesh Iyer from Mahindra Financial Services joining us right now to make a pitch to his investors as a 3,000 crore rights issue goes underway tomorrow. What is a rights issue for us? For starters, those who are joining us right now, it's an invitation to existing shareholders to buy additional new shares in the company at a discounted price. So you will get the shares at a cheaper price. So M&M Financials right now is trading at around 128 rupees a share. What the company is offering to its existing shareholders, people who already have shares in M&M Financial Services, can buy additional rights to additional shares at rupees 50. So why is the company doing that? Usually the purpose of such a rights issue is to shore up capital, make sure there is additional, expand the net worth of the company. And that's why, rights issues are usually undertaken. Of course, on the specific goals of the company and what are the risks and opportunities that lie ahead for M&M Financial Services. Ramesh Iyer, welcome to Business Insider. Thank you so much for taking time out and with very good wishes for your intended fundraising. Let's start with what do you make of the market reaction to this? The stock has been tumbling down for the last few days. Why aren't investors excited about this?
So I'm not too sure the market going down has anything to do with the rights.
Okay.
Right? I think there are mixed news that's come about from what's happening in rural, how the market is panning out. Is there going to be a next moratorium, right? And if the moratorium was not to be there, how does the NPAs, the industry starts to perform? So I think it's all at the back of the performance and not anything to do with the rights issue. So it's all about what's happening and what's the market news, the COVID, moving towards possibly a little of rural. So there are news from UP and Bihar. So I'm sure there must be all of this put together. So I don't think it's anything to do with the rights issue.
Yeah, definitely. Because I mean, one could make that case because you recently posted your first quarter earnings, and the numbers were fairly encouraging, more than double at the profit after tax level. That must have been a fairly a relief for you. What are the other trends that you're watching out for? I mean, definitely this rise in bad loans and loans under moratorium. These are something to watch out for. What has been the trend like for M&M Financial Services?
So, fortunately, rural India was insulated from the pandemic that all of us are suffering from in the urban centers. And then at the back of a good harvest, we did see farm cash flow improve in rural. And that was really the support that we saw in the first quarter as we saw people repaying their installments. Very interestingly, when April the moratorium was announced, upward of 75% of the customers opted for moratorium because one, they didn't know what that moratorium was. Two, they didn't know how long will this problem continue, and therefore, why not store the little money that they have? And both of that got them to ask for a moratorium. But then, as things were more clearer that they will have to repay with interest, etc., and the harvest money came in. And when we saw in June, more than 40% of the people who've taken moratorium have actually repaid their installment. So my understanding is that the rural sentiments have turned positive at the back of a good harvest. Good news that the monsoon has been pretty good even in this round. And therefore, even the next harvest is expected to be good. And with the government focus in rural, whether opening up of mining, some coal excavation, as well as road projects opening up, my understanding is you will see from the fourth quarter of the year, that is Jan onwards, or maybe from October, you will start seeing good trends. But Jan onwards, one can start seeing even the infra cash flow coming in. And that should do good for the rural.
Okay. So what has been your collection trends like? Has it really improved with the, I mean, the last time I think you gave an interview, you said in June there was a sharp improvement. Has that sustained or has it taken a dip again?
Definitely, from April to May, it was double of April. April was a disaster at 14-15%. It went up to 28 odd percent or 30% in May, went up to upward of 77% in June. And July, good news is that as we see our numbers, it has been equal to or better than June for the same number of days.
So that's about 77% in July as well.
That's right. That's holding up very well.
Okay. So does that seem like a level that's going to continue for some more time?
I think normally July, August and all, not major activity month, even in a normal time. With monsoons around, the economic activity comes down. The real test would be what happens in the third quarter. Post the monsoon, how does the festival season pan out? Does the activity begin to happen? And then as monsoon ends, what's the outcome of the monsoon? Is the yields likely to be good? So I think third quarter will be the real test, and you will start seeing post November money starts to come in, stretching up to February, March.
Just for my curiosity, your the best time for your business, especially tractor loans, etc., would have been April, May, June.
As far as disbursements are concerned for
Yeah,
tractor,
yeah.
but for rural on the whole, I think the second quarter and third quarter, third and the fourth quarter, starting
Okay.
October, stretching up to March, historically is the best
Have
period.
you made a change in the mix of the assets in terms of who you are lending to in a post-COVID scenario?
Not because of post-COVID, I think it's an outcome of an absolute volume for each product.
Okay.
Right? So if April was no sales month, and
Uh-huh.
May saw more tractor sales and less vehicle sales, and June continued that way. So if you look at the monthly disbursement, I think 45-50% of the disbursements went to tractor and the balance went to other vehicles. But on an overall mix of the book is concerned, 1 month doesn't tilt the balance.
That's true,
So
but
we are still
overall,
about 18-20%.
what is your current mix like?
So about 17-18% is tractor. Another about 25 odd percent would be the Mahindra Auto parts. And then you have cars about 28%. Then you have pre-owned vehicle about 10%. And then small commercial vehicle, LCV, and construction equipment will altogether be another 8-10%. I think SME is dropped to about 1 or 2%.
So, is it a concern, the heavy reliance on the automotive sector and in general the trouble that the sector is going through? There is really no revival in sight for the automobile sector, or am I seeing it wrong?
I think that's not the right thing, right? It's a divide between urban and rural again. I think what you don't see as an auto demand is more an urban phenomenon. You talk to any OEM, they're all talking of rural revival, footfall in the dealerships have improved. Actually, the real constraint for auto currently is the supply. They are not able to make vehicles available to dealerships while there is sufficient demand for small cars, pickups, small LCVs, small three-wheeler goods carrier in these kind of product. But the supply is weak at this stage. And the inventory levels at dealerships are at its lowest. So I would think that if they can make sufficient vehicle available, I think there is enough demand.
And do you have let's talk about your asset quality as well. I mean, before that, let's focus on the goal of this rights issue, right? Do you have any specific targets and where do you want to use this money? What has been the need for this right now?
So clearly, while it boosts the capital base, but the overall money is only about 3,100 crore, around 33089. So which is just equal to, at the current level, equal to 1 month disbursement.
Okay.
So it's not a very large sum in the sense of absolute value is concerned.
Which is why I'm a little curious, because you're a 15,000 crore company. Your your loan book is fairly much larger. So what is this 3,000 crore going to do for M&M Financial Services?
No. So don't look at it from a cash flow perspective. Look at it from a capital boost. So straight away from a 15-17% capital adequacy, you go to 19-20% capital adequacy level. Okay. So it gives you phenomenal leverage capacity. It then gives you room space for growth in future. And for some reason, if market conditions turn negative because of COVID, and COVID stretches much longer than anybody imagines, and it also addresses your solvency issue. You remain absolutely strong.
Okay.
So I think the overall purpose of raising capital is very simple, that we want to be strong and we want to be readying ourselves for future growth. That's absolutely no doubt in our mind.
So it's a stitch in time, or preparing for the worst and aiming for the best.
I think, when we discussed about the need for capital and rights issue as a format in April, obviously we thought, we should prepare for the worst. Because, the lockdown had just been announced. Nobody had a clue on how long will it stretch, right? And the moratorium got announced and, everything was going negative, no sales happening. So, everyone wanted to be prepared for the future. As came May and June, then we started seeing, phenomenal revival of the rural market. So the pitch turned to saying that if things are getting better, you would have a phenomenal opportunity of growth taking you to 30-35% growth year on year. and that again would need capital. So the purpose of raising capital and the intent to raise capital was well timed and well meant. And it therefore meets the purpose.
Interesting. So you are still gunning for a 35% growth this year again in FY21?
Not this year is out of question. I think nobody should talk of growth this year. I think everyone should look at is market beginning to happen. Right? So I think post March, let's look this year March, if you look at my personal opinion, April to March volumes, if you look at, would be 50-60% of previous year.
Okay.
Because you've already lost one quarter without doing much in the marketplace. There's been no sales, whatever. And then July, August is going to be kind of not very aggressive. Anything that will happen post October. Yes, look at October to March number over last year, October to March volumes for OEMs, etc. One could even see some little growth. But on a yearly basis, if you take consolidated full year, it could be 50-60% of previous year. So any growth anybody is talking is, I guess, only 21, 22, 23 kind of a story. I think F21 is gone. I think you will all have much smaller volumes, and all of us will fight to keep ourselves afloat. We fight to bring down cost, revisit processes, and better engage with consumer understanding their challenges.
Let's talk about this this post, all the lessons and all the changes that you are making in terms of, let's talk about cost cutting, for example. I mean, I think the cost of funds is more or less at kind of frozen in time for the last 3 months, if not longer. Where else are you making those cuts?
No, so cost of funds definitely has come down, like you said. And, even pre-COVID, if you look at our second, third quarter results last year also, we had said that we will focus on various cost initiatives and we'll look at line item wise. For a company of our size, we will not have any one line item which can be completely cut and you will save a lot of cost. Right? Because it's
what is your biggest cost component aside from?
So, one, of course, interest. That's our basic raw material.
Yeah.
Right? And then the credit cost will be the second biggest cost as far as the book is concerned. The third will be the overheads, which comes from branches, therefore people, and then related all the variable expenses around that.
So are you shutting down branches?
No, we are not. Okay. So what we are actually doing is we have looked at each line item. Like, for example, we looked at branch rent rationalization. So we have renegotiated rent, we have moved to new place in some cases wherever necessary, all kinds of stuff. The second is all the peripherals attached to the branch, whether security, whether BPO services, below the line advertising and branding exercises, right? The traveling and conveyance expenses. So if you use little more of technology and digital, you are able to bring down little of conveyance, right? So I think each of those line items have been looked at. On the people front, our belief has been very different and strong. We think that if at all you're talking of people cost, that should be the last to look at. That can't be the starting point. You have to look at every other expense before you look at the people cost. And if we believe that the market is reviving and at the end of the day, we have cumulatively 2 million customers from whom we have to recover money. So you need people for that. You may not grow from here for the next 6 months, but you don't hire people for that immediate growth, but you need people for what you have done already. Right? And the branches are also around that. I mean, each branch will have 3,000-4,000 customers to manage. So you can't just shut a branch looking at some few thousand rupee cost and have a problem of handling those 3,000 cases. We look at each line item. Some of the expenses that we would have saved in this quarter could be one-timer. Because of the COVID situation, obviously there are less travel, less electricity, less telephone.
And less sponsorships. That's you should ask us what is your margin right now, and we will tell you it's dead.
So that's what is happening temporarily. But once market revives, business starts to happen, some of those expenses will return. But our own understanding is that at least about 20% cost will come down from any previous year, even if things were to get to absolute normalcy.
So 20% cost savings, 60% business. 60% of the previous year, FY20, is your revenue outlook.
I think good news for a finance company is if you have a good balance sheet, opening balance, right, then your revenue for the year is not affected, right? Because you get revenue from your balance sheet. Basically, the disbursement of this year will hurt you next 3 years little each, because the revenue from these disbursements will get spread over the next 3 to 4 years based on the contract.
And right now, your NPA levels, I mean, your asset quality, your gross stage 3, data is at around 10%, 9.19. Is that correct? And if that is correct, where do you see this by the end of March?
No, so two things have happened. While the gross has been little higher than March, but the net has been lower than March. So
Okay.
we have taken a little aggressive position based on the geography and based on certain product behavior and segment. We have made some higher provisions. So as we progress, if the next 6 months, which is normally the good 6 months with harvest turning out to be good, we would start seeing decline even in the gross NPA. And we will maintain our stance on aggressive provision. We are already 40% coverage. Whereas under the ECL model, historically, we've looked at we don't need more than 30%. That's fine with us given the current situation. And we will have a very close look at our understanding of what's happening in the market. If we start seeing things are not improving as we think, then we may even take a higher provision going forward if necessary.
Which is your biggest sector exposure other than automotive?
Tractor is 17-18%.
Tractor 17-18%, right? So the other thing is what I'm trying to get at is a 77-80% collection average per month, and 20% not coming through. What does it translate to on an annual basis? Let's say this continues for 6 months, say April, May, June, July, August, September. What does that number look like?
No, so if you look at 20% not collected, you start saying 70% or 70%. That is a cumulative number, right? So it's not every month 2020 doesn't come, so your overdue doubles itself at the end of 5 months or 6 months.
Okay,
that's not the situation, right?
Which is why I'm asking, what does it add up to at the end of, let's say, September?
No, so that's what. So one can expect if you had 100 rupees overdues at any point of time, and if 20-25% of the customers don't pay, and at the end of 6 months, it could be a 130% outstanding. 30% increase would happen. What is important to look at it is that are the customers servicing their loans? If not every month, but at least are they paying, some installment monthly or a full installment once in 2 months? This is what is the real indicator of his ability to pay in the given situation, right? So if somebody does not pay at all for next 3 months, he becomes an NPA anyways, right? So when I say that we expect the gross NPA to decline from where we are as we close the book in March, which is with an expectation that the consumers will start to pay post-September once the market opens up, or at least the activity begins to happen, right? And in the next harvest, money starts coming in, which will come anywhere between November to February. That would be a great revival, and that's what historically we have seen as well, right? But what is the good news for rural is if both farm and the infra cash flow does well, right, then rural does extremely well. Look at 2010 to 2014 period, right?
But I'll tell you, just as in right now, I don't have the data handy with me, but there is definitely a signal that the COVID infections are spreading beyond the cities now. Now is when it's actually starting. Is that something that you're taking into account yet?
Yes.
A lot of.
I think again, it's important to look at rural from a very different perspective. Yes, in UP we are seeing cases, Bihar we are seeing cases, but are they concentrated in one place? No. Unlike major cities where it's very concentrated number, in rural it's a very widespread number, right? Some village 2 cases, some other village, some other district, some few cases. So it does not affect the overall economic activity of the place, right? So even as we speak, and when we are also seeing these numbers going up in different cities, but that's not affecting the local activity completely because it's not concentrated, and the activities are also spread across, like farming. That's not going to be impacted if there is going to be some cases around there, right? So I think one has to take into consideration the spread of rural, and therefore such kind of impacts are very minimized because of the nature, the way the whole district is situated or distributed.
Fantastic. Let's one closing comment on what the Reserve Bank of India governor today spoke. I think what we made out of that was the corporate India is looking for a one-time restructuring of loans across sectors, one blanket restructuring, a COVID special stimulus, if you may. But what I think the governor is indicating, or at least he hasn't said it, but largely the expectation from the government and the administration and the governor is another moratorium, another lockdown, a sequence on those lines, something that we've already seen. Which side of this debate, which do you stand on?
See, one thing is very clear that given the stretch of the COVID and the economic activity just about reviving, customers are not going to start earning immediately in September to start repaying. So there's no doubt in our minds that customer may need more time. Now, what we are debating or discussing is the format, right? What at least we see from a retail customer's perspective is not all of them need a 90-day moratorium. Some of them need a restructuring of the loan because they want a smaller size EMI. Because their income has shrunk and they're not able to repay so much. Some of them want a much extended period of their loan. Right? Some of them want a shorter moratorium, maybe a 1 month moratorium, because let's take a farmer. He may say, my money is going to come in November, right? So please give me only a 30-day or a 45-day moratorium, not a 90-day, because I don't want to bear that interest. So if you were to take it this way, then my kind of a point of view would be restructuring is a good approach where an institution can look at each customer and segment and then look at what is required. Like, for example, for a heavy commercial vehicle operator, 90 days may be insufficient because he may start his earning only post January or whenever, because currently he has no volumes to carry, right? So now you give him 90 days, he will consume that 90 days. Again, he's going to be not able to pay once he opens up in January. So if you put all of this together, at least at the retail level, our understanding is if you give a restructuring, which is the responsibility of the company to see to whom you want to give and what kind of a restructuring you want to give, and put in place an approved process by which we'll be monitoring it.
What is RBI's role in this? Why can't a bank or an NBFC take that call on a case-to-case basis?
No, so the point is that if you were to do a restructuring without a proper approval from the regulator, suppose, then there is an additional provisioning requirement which comes in. Right? That's the current rule. Okay. Like if you look at in February, there was a circular.
But right now, we also have that holiday for NPA classification until next year, right? Under the Atmanirbhar. The NPAs need not, because of the COVID, whatever NPAs are generated, they need not be called NPAs until next year.
That is provided the customer has taken the moratorium or you are offered the moratorium.
Okay.
Suppose you are not given a moratorium and the customer has not opted for one, then you have a regular billing and he is classified on a normal basis.
Okay.
Right? So in February, there was a circular for MSME where a restructuring was allowed and therefore they were not required to make a provision. We are saying a similar thing can be looked at for the retail loans or corporate loans, depending on what the responsibility is ultimately the organization. See, all of us have to recognize that we should not use this for, camouflaging the normal default accounts and things like that. Right? So therefore, there is enough.
No, but that is a risk, right? I mean, that is probably why the RBI would sound a little more.
No, but then skeptic. I think there is enough ring fencing, right? They have said that freeze the account as of February 29, and there should be standard account on that day. So there should be not more than 2 installment outstanding on that day. They should not be already a NPA account. So there is a very clear ring fencing which has happened on it. So, and then ultimately, the responsibilities of the customer, of the organization, that whom do you give what kind of a restructuring or what kind of a time frame. So, that's what the ask is or a request is, that if that can be considered on a restructuring basis with
what will be the cost of this from a systemic point of view?
No, it will be, almost the cost should not be more than what you should have given a moratorium. Right? I mean, I don't think anyone is going to restructure and make the loan from 3-year to a 7-year loan and things like that. Right? Because there has to be a logic behind what you do and it has to be a board approved policy. So therefore, the responsibility will be on the operating management approved by the board. And that's the policy which would be followed.
Amazing. I think there was a fairly candid sharing of point of view. Let's hope the RBI is listening, and I'm sure it will take the right decision or rather takes the decision that the governor thinks is right. We will definitely watch out for this. Of course, do you want to make a closing pitch to your investors? Why should they subscribe to this rights issue? What is so exciting about M&M Finance in the coming days and months?
So very clearly, M&M Finance has been in rural market for the last 25 years. We have seen ups and downs of the market, and we have believed that market will always have that kind of a behavior, cyclic impact, etc. And we have bounced back at every stage when things have begun to happen. We very clearly see between 21 January stretching for next 3 years after that, to be a great time for rural with both farm and infra cash flow chucking in extremely well. So I think a company like ours, deep rooted, large number of branches with a large customer base and relationship, has phenomenal upside of growing in that market. And that's the purpose of this capital raise. And we have priced it attractive as a form of a reward to the consumer or to the shareholders who've been with us all through the period. So my request and expectation that everybody participates.
I want to tie this back to the first question that we started this with, which is basically you said that the share market, the share price reaction is not one for the rights issue. It's more about the systemic risks. Is there something, I mean, a 9% fall today? Is there, why is the market so nervous about M&M Finance right now?
I think the last 2 days, it's not just M&M Finance. I'm sure if you look at
yeah, exactly. Yeah, many of the,
yeah, all of them would have reacted that way. Because last 2 days, I read few reports on, rural is not as insulated as it's looking to be. There are problems in rural emerging. Rural economy is not reviving as good as it was projected to be the last few days back and all kinds of stuff. So I think that's a reaction to that. So we all have a role and responsibility in putting out the factual data of what we see on the ground. Right?
Definitely, but things are so fluid right now, Mr. Iyer. We know that things are really evolving on a minute by minute basis, day by day basis. Whether it is the cases, the deaths, the spread, the floods. There is, I mean, 2020 has been a forgettable year. I hope which is why the nervousness, I guess, and then obviously from a media point of view, we try to say as many things as possible, as many viewpoints as possible. And you definitely made your case today here. And I hope the shareholders of M&M Finance are watching and will, I hope a grand success for the 3,000 crore rights issue that's kicking off. Thank you so much for taking your time out.
Thank you
and all the best.
Thank you. Thank you very much. Enjoy talking to you.